Hello, everyone. Welcome to another episode of In Conversation by Advisor Coach. Today, once again, our very dear friend as our guest, Mr. Akhil Chaturvedi, Executive Director and Chief Business Officer with Motilal Oswal Mutual Fund. Welcome, Akhil, to In Conversation by Advisor Coach again.
Thank you, Soren. Thank you so much.
Always a pleasure to have you.
Absolutely.
So, Akhil, you're running a campaign. Motilal Oswal Mutual Fund is running a campaign aimed to transcend growth effortlessly.
Right.
So what does it exactly mean, aim to transcend growth effortlessly for, investors? If you could just, elaborate a bit more for our viewers and why this thought came to run this campaign.
So a couple of things we are doing a big brand campaign around two agendas basically. One agenda is basically to position ourselves in front of our distribution partners and investors as growth investors.
Mm-hmm.
So that's one campaign which is, I think, in next few days you will see some stuff coming around. And the other campaign is more on the product side. So the one you're talking about today is on the product. You would have seen the paper ads and
Mm-hmm.
there are TV ads and hoardings and all of those things. So if you see the ad carefully, what we are saying is that any investor has a journey. Journey starts or ideally would start with probably a large cap and then moves towards mid cap and then moves towards small cap. Often what we have seen is that there is a confusion about or maximum number of questions which we actually face from investors is that how much to put in large cap and mid cap and small cap individually. What
Mm-hmm.
we're trying to say is that rather than getting into conversations around large, mid, small, etc., there are four or five larger, broader categories where the funds are giving you a combination of large, mid, and small. So, for
Mm-hmm.
example, if you see the ad, we have put three products also.
Yes, I did.
Yeah, so there is a Flexicap fund where the manager has complete flexibility to decide, depending on market mood, how much to be in a large or mid or small. Similarly, we have a large and mid cap fund where again one third of the portfolio mandatorily would be in large caps, and one third of the portfolio mandatorily would be in mid cap. The rest
Mm.
one third is flexible around large, mid, small, again depending on the valuation, etc. The third fund, again, in a similar category, I would say, is the multi-cap fund,
Mm.
where it is even more strictly defined, like a quarter in large cap, a quarter in mid, a quarter in small, and the rest of it is open basket, right?
Yeah.
So I think all these three categories broadly gives enough flexibility to the managers and investors to participate in good companies across market cap cycles.
Right.
So that's the whole campaign around that. Be more so in today's day and age where the markets are looking good, but valuations are something which is on top of the mind of everybody.
Mm-hmm.
So our strong recommendation is to be around funds which are a combination of all kind of companies. Company is important, not the market cap. So wherever we can get good quality and good growth, hopefully at a good valuation,
Mm.
so that headache is left to the manager. For the investors, pick and choose any one of these funds, and what earlier we used to call buy right and sit tight. So it's that kind of a that's the thought process behind doing this one campaign. The other campaign is around positioning ourselves as growth managers. So
Mm-hmm.
so you would understand, and I'm sure the audience also will understand that. See, the markets will always go through cycles of different styles of investing, right? So there are times when a value style does very well.
Mm.
Basically, companies where the valuations are very, very low, you buy at discount and then you wait for the prices to move up. And that's one very large style which a lot of portfolio managers practice very, very diligently. Right?
Yes.
That's also a good style. The other part I would say is growth style of investing, where the portfolio managers are trying to chase the earnings growth of the company. So not necessarily they are trying to buy cheap companies, where they are
Mm.
trying to buy companies with very strong earnings growth for next several years, and then ride the journey of the growth of the company. Eventually, what we have seen in markets that eventually in long run growth is equal to return, right?
Mm-hmm.
So eventually shareholders would make as much money as the company makes. So, for example, if a company makes a 100 rupee profit today,
Mm.
it's at 10 P multiple valued at about 1,000 rupees. if after 3 years, 100 becomes 200, the profit becomes 200, which means the company has compounded at 25%.
Mm-hmm.
Then
Mm-hmm.
at 10p multiple, the valuation would be 2000 rupees.
Right.
That's our thought process. Now, what happens other thing in the market is that when you pinpoint on a company which can do very high growth, then the market also tends to give you a higher p multiple. So that
Mm-hmm.
becomes, so one source of return is the earnings growth. The second source of return is actually the re-rating or the de-rating of the PE multiple, right?
Sure.
So we have position, we have been always growth investors. If you see our philosophy, QGLP, it's
Mm-hmm.
high quality, high growth at reasonable price.
Mm.
Uh, Now, a decade back, growth was in defensive sector. So we used to focus a lot more on quality, because within quality there was growth. In the
Mm-hmm.
last 5 years, or more specifically after COVID, the markets have really broad-based, and there are, the earnings is actually now very, very broad-based across multiple sectors and businesses. And after all these IPOs, there are so many new opportunities to invest. Right now, without compromising on quality, we are trying to hunt uh, for companies which can demonstrate some very good, strong earnings growth into the future.
Sure. So
So
this campaign is for a month. So when does this campaign close?
I think mid of next month, until mid of next month, this will continue.
Right. Right.
And along with the outdoors, uh, we are also running the campaign across various cities. So I'm traveling. I'll just be leaving for Pune in some time.
Right. Right.
So
Right.
we are connecting with our distribution partners and explaining to them the rationale behind the campaign.
Right. Right.
We're doing some press meets, etc. So we're
Sure.
trying
Sure.
to basically just trying to educate people around what we are,
Yep. Yes.
what we are
Yes.
trying to do. Yeah.
So essentially, the campaign leads to a lot of communication and education and talking about these three funds, what you named,
Yes.
and of course, connecting a lot of online and offline with the distribution community across the country.
Yes.
Right. So when I look at Motilal Oswal Mutual Fund, you have a high quality, high growth strategy. You did, of course, mention a bit on that. Could you elaborate a bit more as to why high quality and high growth strategy is something which Motilal Oswal as a fund house follow?
Yeah. So when you'll see our brand campaign, the tagline is high quality, high growth,
Yeah.
benefit from both. So that's the tagline. Now, see, when we look at quality, or let me put it this way, uh, whenever you invest in a very risky asset class where, the prices are changing in the millionth of the second,
Yes.
there is a chance of drawdowns or even losing your money, right? So
Mm,
equities
mm,
is one such asset class which
mhm.
obviously creates a lot of wealth, but you need to do the right things to make money out here, right? So there are about 6,000 odd listed companies, actively traded companies in the market,
Yes.
and uh, and we want to with discipline manage investors' money. So therefore, we have to ensure that uh, the downside is as much limited as possible. So
Yes.
we protect the downside for the investors, and the only way to protect the downside is basically focusing on quality.
Hmm.
Now, so the first filter what we apply to the 6,000 companies is the quality filter. What we look into quality is two aspects. One, we look at quality of the business. So what is the business all about? What is the opportunity size of the business? And then we look at the management, the quality of management, right?
Hmm.
So in essence, we are looking at management who are minority shareholder friendly. So, how do they manage their cash flows, the capital allocation strategy, dividend friendly or not, corporate governance, do they pay their taxes, etc. All of those things in time. So one, we do a check on whether the business is scalable or not. Then we do a check whether the management has a growth mindset or not.
Hmm.
Third, we do all the financial checks. And the other aspect in financial terms, in simple terms, you have to understand is do a check on return on equity or return on
Hmm.
capital employed. And any business which can make a ROE or a ROC higher than the cost of capital. Let's say in India, the cost of capital would be 12-13%. Companies basically doing a return on capital over, in fact, the index companies are at 15% ROEs today.
Hmm.
So obviously we need to have a portfolio which is at least equal to or higher than
Yes.
15% ROE. Now,
Yes.
you'll be surprised that by putting the quality filter, which is this whole ROE framework and some other due diligences, 90% of the companies are actually filtered out.
Absolutely.
right? So from 6,000 companies, you are left with about 500, 600 odd companies. So that means your first quality, which is your downside minimization, or protecting the risk side, is done. Broadly, it is done.
Universe has shrunk really.
Yeah.
Yeah.
Then the second check is the second framework is the growth framework.
Hmm.
When you have got your quality, now you have to search for companies which are quality but are also, like I said, growth mindset. Uh,
Hmm.
the industry within which the company is operating has a huge opportunity size over the next 5,
Hmm.
10,
Hmm.
15
Hmm.
years.
Hmm.
Because only if the opportunity size is big, the company can actually become bigger within that opportunity.
True.
So then we are looking at companies which can deliver strong earnings, at least couple of percentage points over the earnings growth of the underlying benchmark, right?
Sure.
So that again filters down by half. So let's say from 600 you come down to
Hmm.
300. So
Hmm.
then you have your quality and growth. Then you have to do a filter of longevity,
Hmm.
is whether the quality and growth is visible for 2 years, 5 years, 10 years. Uh, and then finally, the most important parameter is the price framework,
Hmm.
right?
Hmm.
So you
Hmm.
have to buy a good company with good growth at a good price,
Of course.
because the outcomes in the medium term, short to medium term, are all function of how, at what price have you bought.
At what price?
Long time,
Absolutely.
maybe it will adjust, but in
Hmm.
let's say 1 to 3 years, if you're
Hmm.
buying a good company at a wrong price, then
Hmm.
you have a longer waiting period. Like
Hmm. Hmm.
actually in 2019, I'd gone for the Berkshire Hathaway AGM. So Warren Buffett made an important statement that a company doesn't know at what
Hmm.
price you are buying. So a
Hmm.
company may be good, but if you bought a good company at a
No,
wrong
no.
price, you can't blame the company for that, right?
And,
So
and, and it's very true. It's very correct.
exactly. So that's the whole thing.
Yeah.
Quality growth, very, very large frameworks. It actually makes our life very easy to
Hmm.
create a
Hmm.
universe. So today, probably we are actively tracking about 250, 300 businesses.
Hmm.
We have invested in unique 165 companies,
Hmm.
which are broadly fitting in this framework of high quality, high growth.
Right, right. So basically, entire forensic on quality,
Yeah,
growth, as
yeah,
well as valuations and financials for an organization,
yeah.
and then taking a clear universe from which you will pick up these about 165 unique companies where you invest in. Wonderful.
Absolutely.
So in this campaign, aim to transcend growth effortlessly. Three schemes like you mentioned: the large and mid cap, the multi cap, and the flexi cap fund. Now, of course, Flexicap is something which is very dear to my heart
Yeah.
as a fund. So, could you just tell us more about Motilal Oswal Flexicap Fund, because I think it's a rock star fund.
Yeah, yeah, yeah. So, yeah, Flexi is one of our oldest products. It's
Hmm.
completed a 10-year track record. It's a beautiful track record of upwards of 20% compounding, with a good 2.5, 3% thereabouts outperformance over the Nifty 500. It's lived through its own cycles of
Hmm.
a very good performance, and then a bout of underperformance, and then it's
Hmm.
back. It's
Hmm.
back, I think, in the outperforming zone. It's also one of our largest fund, with about close to 15,000 crores of AUM.
Hmm.
Like I said, that FlexiCap fund is managed by Niket Shah,
Hmm.
and given where we are today, the fund is broadly 40-45% in large cap. So given where we are in terms of the valuations, uh,
Hmm.
40-45% large cap gives enough protection towards any short-term volatility, which could be around whatever is happening globally, more to do globally with
Yes.
the
Yes.
geopolitical stuff or the tariff stuff.
Hmm.
So
Hmm.
that
Hmm.
40-45% gives protection to the portfolio. It will minimize the volatility just in case the corrections happen. Uh, about another 40% is into mids and smalls,
Hmm.
but higher end of the mids and the smalls, not
Right.
the very, very
Understood.
low
Yeah.
end. So if you look at
The bigger boys in the mid cap can.
if you look at total portfolio
Hmm.
with companies over 50,000 crores,
Hmm.
is very, very large.
Hmm.
Would be like good 50. Actually, the large cap portion will move up from 45 to
Hmm.
like
Hmm.
55, 60. But in the definition, top 100 companies are the large caps, right? But
Hmm.
if you just put the 50,000 crores and above, the tilt towards higher higher end of mid or higher end of small is that that much more stability, right?
Sure, sure.
And we had some cash in the recent past in the portfolio, which is being deployed as we speak. So currently we have small cash of 10-12%. I think that also in the next
Hmm.
couple of weeks
Hmm.
should be fully invested. Like you said, yeah, the fund has been pretty stable.
Hmm.
It's shown a very good comeback. And now if you look at the 1 3 year, looks very good, and the long term looks very good, and it's a
Hmm.
seasoned fund because after living 10 years and winning all the accolades and getting bashing and then again that way it's a tough fund. I think both my mid cap fund and the
Yeah, yeah,
yeah,
absolutely.
completed their 10 years track record. So that's
Absolutely.
what you earn. Like, I mean, eventually, if you're loyal to a fund for 10 years, you make a killer. But
Yes,
if you're
yes,
going
yes.
to, if one has will change decisions on 2 year, 3 year, then the compounding journey just simply kind of
Absolutely.
yeah. So
Absolutely. So about 45% in large cap, which of course, acts like a cushion for any market shocks.
yeah,
And industry average on Flexi's large cap has been about 55, 60 odd there. So
industry average actually would be slightly higher. Right? It should be more than 60-65%.
yes, about 65 odd percent. So
Yeah. But
that
fortunately, we
also,
have yeah. Fortunately,
that,
we have this 15,000 crores is a sweet spot.
hmm,
Most of the old flexicap funds are pretty large in size. So maybe,
hmm, hmm.
they might be taking
No,
protection.
but I'll tell you, not only does it cushions the shocks which could get created in the markets, but it also, gives an opportunity that if there is any growth and a momentum coming
True.
up, then it participates also equivalently well.
Yeah. Yeah. So moving
Absolutely.
around the portfolio, changing, buying or
Yes,
selling positions
absolutely,
becomes that
absolutely.
much more easier.
So tell me, Akhil, I know that about Motilal Oswal MF, that you look at buying, stocks where you have very, very high conviction, correct? So you
True.
don't get into long tails and stuff like that. So how many stocks would you be holding in large and mid cap or multi or flexi?
Broadly,
Approximately, yeah, broadly, yeah.
yeah, it would be in the range of 25 to 35 stocks.
So that's the uniqueness.
As per our philosophy, at this stage, the philosophy or the policy is to be under 35 stocks across any
Hmm.
portfolio. So
Hmm.
apart from high quality, high growth, we do focused investing.
Hmm.
And I'll give you one very interesting data point. Investors or distributors are giving us allocation to give them a flavor which is very different from the index.
Yes.
Right. So now if you see my portfolios, any portfolio except for the large cap fund, any portfolio you open up, whether it's a mutual fund or an alternate portfolio, my active share is anywhere between 85 to 97%.
Hmm. Hmm.
85 to 97%. I am
Hmm.
different from the benchmark.
Yes.
It could be different in terms of the stocks. So different stocks between index and us. Apart from that, even if there is a common stock, there is an active weight around the
Hmm.
allocation strategy, right?
Hmm.
For
Hmm.
example, very simple example, HDFC Bank in the index could be 7.5, 8%. And
Hmm.
here zero. So your
Hmm.
active share actually moves up, right?
Hmm.
So even if there is a common stock, you will see a vast difference between the holding patterns, and then obviously how many stocks I can do outside the index. So
Yes.
we have to create a portfolio which is very differentiated, very unique, very focused,
Hmm.
actively managed, and then it is trying to outperform the benchmark.
Benchmark, absolutely. No, this is the uniqueness actually, Akhil, which I think Motilal Oswal, as a house and as a mutual
Let me
fund.
also add one more thing, Suren,
Sure.
that we believe in giving one manager only two portfolios.
Oh,
Don't
okay.
believe in giving one manager 10
Yeah.
portfolios
Otherwise,
because
the thoughts get cloned.
yeah. Now you can imagine that if a manager is managing five,
Hmm.
six funds with let's say
Hmm.
70, 80 stocks
Yeah,
per
yeah, yeah.
fund, so 70, 80 multiplied by four, we were talking
Yeah,
about
yeah.
300 stocks. Who will remember? How will you remember?
No, and quite honestly, the styles get cloned
Yes, yes,
across the funds. So the two funds per fund manager is a great strategy, and of course the uniqueness where you said, as a strategy, not more beyond 35 stocks. I think this really differentiates Motilal Oswal funds, and I have seen the difference in the way the funds perform,
yes.
and even not across short term but long term. If you look at the CAGR or rolling return as well,
Yes. So
fantastic.
the larger point I forgot to mention earlier was that see why we are doing this campaign is because we are saying that investors have to buy a couple of funds.
Hmm.
That means couple of differentiated fund managers,
Hmm.
creating a diversified portfolio of variety of fund
Hmm.
managers and their styles. So what we are saying is that largely there are quality-oriented fund managers, there are value-oriented fund managers, there are growth-oriented fund managers.
Hmm.
So you can pick
Absolutely.
and choose one or two funds in each of the style.
Yes.
At
Yes.
different points of time, different styles will perform, but your portfolio will continue to do stable performance. So
Absolutely. Bang
something or
on.
the
Bang
other
on.
is working. So we are
Because
saying that position us for growth, not for
hmm.
everything,
Yes.
and buy something somebody else for value and buy somebody else for quality, and
Hmm.
uh, and just enjoy life. No? I mean, then you
Absolutely.
don't need to do anything,
You
right?
couldn't have said this better. You couldn't have said this better because what happens is that even if you, let's say, invest three large and mid caps across the market, you'll
Yes.
find them behaving so differently
Yeah.
because
Yeah.
each one is, their perception about market risk and growth is very, very different, very
Hey,
unique to each other.
in my personal portfolio, without naming, after I realized this whole area of actually diversification across styles,
Hmm.
I have bulk of ammo, like it's very closer to 100%, right? But incrementally, I am consciously building some diversification with a manager who's like the true blue style value manager. I mean, you can guess
Hmm.
the name. That's it. So you need one that manager and one I'm with them also, right? Growth
Absolutely.
and value
Absolutely.
benefit from both.
Yes, yes, absolutely. So what's new in Motilal Oswal Mutual Fund? What are the plans ahead?
So, you've been tracking us for about over a year now. So, what you would have seen is that several
Okay,
things.
2 years, 2 years now.
2 years you're tracking us, and we know each other for a longer time.
Much longer.
So we've been through a huge kind of a change in terms
Hmm.
of our philosophy,
Hmm.
our stock picking approach,
Hmm. Hmm.
our like quality and growth frameworks.
Hmm.
And what uniquely when we said that we will be growth, we said, okay, let's sit down together and hunt for growth, right? So we
Hmm.
started hunting down, these unique themes where we could visualize 2, 3 years of stronger growth momentum. So theme based, there has to be a science for everything. So QGLP in general for creating a universe. Now in the growth framework, there is another framework.
Hmm. Hmm.
This
Hmm.
this identification of themes. For example, within the lending side, NBFC is doing better than the large banks. On the
Hmm.
IT side, mid cap ITs are doing better growth than the large cap ITs. On the
Hmm.
consumer side, consumer discretionary companies are doing better growth than FMCG, so on
Hmm.
and so forth. And then the whole manufacturing piece, Make in India, China Plus One, again are very, very strong themes, which are all, kind of directed to move our economy also forward.
Hmm.
So we
Hmm.
did those identification of themes. We could then pinpoint on the businesses where we could really invest for good returns, right?
Hmm.
And that actually has changed the whole performance snapshot what you see today, right?
Hmm.
So I think, and then we put some very strong risk management frameworks to ensure that the volatility can be minimized. So I say this way that we have made people level changes. So our investment team is refreshed. We have a lot of new managers who have joined us, and we continue to add. We will continue to invest in the investment team. We have very stronger philosophy, stronger positioning, stronger portfolios, and stronger performance. So, like multiple P's out here, right? People, process, philosophy, portfolio,
Absolutely.
performance.
Absolutely. Yeah, it
So,
covers 360.
and
Absolutely.
and then, as the performances started to shape up, we had a lot of ground to cover in terms of filling up our product gaps.
Hmm.
We have now broadly completed all our frontline products like large cap, mid cap, large and mid cap, small cap, so on and so forth. Now we are looking at thematic opportunities. You know, like we did a manufacturing fund. We feel
Hmm.
that next 20, 30 years, India
Hmm.
will be a manufacturing hub. The
First one to do the defense as well.
the defense fund. Defense
Hmm.
also, so manufacturing is much larger space.
Much broader, of
We,
course. Yeah, yeah.
we feel that one very interesting theme which is building up in India is the digital theme. So these are
Hmm.
very long-term themes, like 10, 20, 30 years. Maybe in the top 100 companies of India, you might have 10, 15 digital companies.
Hmm.
Like
True.
US got its own Nasdaq, we may have our own digital index itself, right? So we're doing a lot of work on where we can create opportunity for alpha,
Hmm.
and where we we will, if we are not, we cannot, we don't have the potential to do alpha, then we do beta. So then we do
Sure,
the index funds,
sure, sure,
right? Like
sure.
for the moment defense, we did a passive fund. Right? So
Mm-hmm.
on the passive side, so we have like, I think every second month we have some NFO which is going on. Right? So on the mutual fund side, broadly we are done. Now incrementally, the pace of new product launches will be a lot more slower,
Mm-hmm.
and we need to focus on the performance.
Mm-hmm.
Yeah. So
Excellent, excellent,
the
excellent.
other thing we are working on, I mean, it's hopefully in some time will be, of course, this whole new category of SIF.
SIF, yes,
So,
yes, yes. That's the next one to catch up.
so that's something which we are still on the drawing table, but
Yeah.
maybe next
So,
time
Akhil,
around we can talk. Yeah.
how many branches now for Motilal across the country?
We are at 61 locations now.
61
One
locations.
locations. We are closer to 350 salespeople.
And how many locations were you about 3 years ago?
3 years we were more around 28, 30. We have
So
doubled up.
really, yeah, yeah. So
Double.
that, yeah. So viewers, have you heard that? So from 28 to 61 locations in 3 years time period, and that's
My
great. And
okay, so
350
since you're
salespeople.
asking me these questions, my active distributors were under 1,200 3 years back.
Hmm.
But today they are closer to 10,000 uh,
Active.
active. Our unique investor base was 12 lakhs.
Hmm.
Today it is 80 lakhs. Our total folios are closer to a crore, 1 crore
Hmm.
folios. Uh, so I think it's been like, you know.
Beautiful. Excellent. I must compliment you and
And
the
yes,
entire
and
team at
last,
Motilal.
which is like really very dear to me, is that the SIP book has grown from 300 crores to 1150 odd crores.
Wow. I think that's a big one. That's a big one. Congratulations to you and your entire team.
Thank you. All of us, yeah,
Excellent.
all of us have, all our stakeholders, everybody's helped us.
Absolutely wonderful. So, what one message, one quick message, would you like to give from on behalf of Motilal Oswal Mutual Fund to the investors, our distribution partners, and the advisors?
I would repeat what I said in between the interview, that the distributors, the expectation is more out of distributors, that when you are doing, when you are advising, when you are giving allocation strategy,
Hmm.
please try and do a lot of research on the different AMCs, different fund managers, different styles.
Hmm.
Simply don't go by performance descending order, because that will keep changing every year. But stick to create a strong process. We have a QGLP process to buy 30, 40 companies in a portfolio. One should have a process, very strong process to give differentiated portfolios, differentiated multiple portfolios to investor, and
Hmm.
try to bring the correlation between each portfolio as close to zero as possible.
Sure.
Therefore, the outputs could be
Hmm.
very, very different. And
Hmm.
like
Hmm.
I said, if you have like six funds, at any given point of time, three or four will do well, two will not
Hmm.
do well, and then that cycle will keep changing, and client's life will be sorted out. And once you have done that, then please give any fund manager with whom you have believed in at least a 10-year cycle, not a 3-year cycle
Absolutely.
or a 2-year
Yes.
cycle or a
Yes.
5-year cycle.
At
You
least a
need
decade.
to
Hmm.
test a manager. You need tenure. The manager has to go through one or two ups and downs. Keep
Hmm.
a track on the manager, keep a track on the philosophy, do all that work on a regular basis, but don't give up too soon, because then it really doesn't play out very well. So allocation strategy, a strong process to decide what to buy, and then long-term approach. I think this is what I would like to force upon.
Sure, 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 sure. So, well, for our viewers, this is Mr. Akhil Chaturvedi, Executive Director and Chief Business Officer with Motilal Oswal Mutual Fund. Currently running a campaign aimed to transcend growth effortlessly, where they're talking about three of their schemes: the Motilal Oswal Large and Mid Cap, the Multi Cap, as well as the Flexicap Fund. And of course, the strategy which, Motilal Oswal as a house runs: high quality and high growth for their portfolio management. And of course, that leads to greater wealth creation for the investors as well. Akhil, always a wonderful, time when we have conversations like this today. Thank you so much for,
Thank you, Suren, for
giving your
helping
time.
us. I mean, the purpose was that through you reaching out to wider audience and communicating, what's there in our minds and thoughts, and so that one can take a more informed decision, get more granular understanding
Hmm.
of what each one of us are doing, and I'm sure it will help over long term. Thank you once again for the
Absolutely.
opportunity.
Always our pleasure. Always our pleasure. Bye bye.
Bye bye. Thank you.